Hi, this is Vernon again here with TaxCorp, and today I want to talk to you just briefly about the process called 6020B. It's Internal Revenue Code 6020 Bravo, that's a B, that gives the IRS the authority to make an estimated business tax return for you when you fail to do so. Now typically, if you have a business that pays wages, so you're filing a 941 quarterly tax return for each 3-month period of the year, you're also going to file a Form 940, that's an unemployment tax return at the end of the year. Typically, businesses, in my experience when I was working for the Internal Revenue Service, if I had to investigate a corporation and they had not filed employment tax returns in, say, 6 or 7 quarters, but they did file one 8 or 9 quarters ago, what I can do under 6020B is go and take that last filed return, take it, make some reasonable estimates as to was that a fair amount at that time. So let's just call it $5,000 worth of federal tax during that period, say 8 or 9 quarters ago. I would take that period, add maybe 10 or 15% to it to capture the withholding tax, and then make that your tax for each successive period that you did not file a 941 and a 940 tax return. So now, because you didn't file it, you're thinking you're in the clear, but you're not, because guess what? Now you owe for 6 or 7 or 8 periods of taxes that you've never filed, and they're always going to be higher than what you would have filed if you'd done it yourself. So you don't want to get into this position where the IRS assesses a 6020B assessment against you. Another way that they can do it is if you never filed a tax return, they can use other sources like your state tax returns. They can go to the state and report and pull your state wages that you reported to the state. Use that as an estimate. They can get bank records and look at items that look like they were called paychecks, and we can do a backwards calculation, and it was called backing into the money, and we can come and say, okay, well, if you paid $4,800 in wages, we could add maybe about 30% to that, because roughly 15% is going to be the employee portion, and another 15%, roughly speaking, is going to be the employer's portion. We put that together, add that to the $4,800, and now we've come up with what we think your wages would have been for that period, and then we can create a 6020B assessment. So that's how that process works. So if you've ever gotten a bill and you say, well, our wages were never that high, it's probably because the IRS created a 6020B assessment for you. So if you're in this position and the IRS is now on your door and they're chasing you down and threatening you with a trust fund recovery penalty, and if you don't know what that is, we've got a video on trust fund recovery penalties here on our site. Go ahead and look at it. It explains that whole process to you. You need to get someone in there who can fix this problem for you. We here at TaxCorp, I've done hundreds of 6020B assessments in my career at the IRS, and I've done probably 20 or 30 reversals of those since I've been in private practice in the past 4 years. Give us a call here. You can reach us at our website at www.taxcorpllc.com. Also, you can email us here on our screen at info@taxcorpllc.com. Like our page and subscribe to our channel for more hints and updates and tips and tools about how to help you resolve your IRS problems. And as always, have a great day.